Hey everyone, welcome back to BitcoinDorks, your daily source for the latest updates in the cryptocurrency market. If you're new here, don't forget to hit that subscribe button and ring the bell for notifications so you never miss an update. Today, we're diving into some intriguing developments in the world of Bitcoin mining. So, let's get started. Recently, there's been a lot of buzz surrounding Bitcoin's miner reserve, with reports indicating a significant drop in the amount of Bitcoin held by miners. This drop has sparked speculation and debate within the crypto community about its potential implications for the market. So, what exactly is happening with Bitcoin's miner reserve, and what does it mean for the future of the world's leading cryptocurrency? Let's break it down. First, let's understand what the miner reserve is and why it's important. The miner reserve refers to the amount of Bitcoin held by miners, who are responsible for validating transactions and securing the Bitcoin network. Miners are rewarded with newly minted Bitcoin for their efforts, and they typically hold onto a portion of these rewards as a form of investment or to cover operational expenses. The size of the miner reserve can have significant implications for the supply and demand dynamics of Bitcoin, as it affects the amount of new Bitcoin entering circulation. Now, let's talk about the recent drop in Bitcoin's miner reserve. According to reports, the miner reserve has declined to its lowest level in years, with only 1.81 million Bitcoin held by miners. This represents a significant decrease from previous levels and has led to speculation about the factors driving this trend. Some analysts attribute the drop in the miner reserve to several factors, including increased selling pressure from miners, improved efficiency in mining operations, and changes in mining economics. One possible explanation for the decline in the miner reserve is increased selling pressure from miners. As Bitcoin's price has surged to new all-time highs in recent months, some miners may be taking advantage of these price levels to offload their Bitcoin holdings and lock in profits. This selling pressure could contribute to the downward trend in the miner reserve and put additional selling pressure on the market. Another factor contributing to the drop in the miner reserve is the ongoing improvements in mining efficiency and technology. Over the years, the Bitcoin mining industry has undergone significant advancements, with miners deploying more powerful and energy-efficient hardware to increase their mining rewards. These improvements have enabled miners to mine more Bitcoin with less energy and resources, leading to a decrease in the amount of Bitcoin held in reserve. Changes in mining economics may indeed be significant contributors to the decline of the miner reserve. The Bitcoin halving event, which occurs approximately every 4 years, plays a crucial role in shaping the economics of Bitcoin mining. During a halving event, the block reward that miners receive for successfully mining a new block is reduced by half. This reduction in block rewards effectively decreases the rate at which new Bitcoin is created and introduced into circulation. The most recent Bitcoin halving took place in May 2020, reducing the block reward from 12.5 BTC to 6.25 BTC per block. This reduction had a direct impact on the profitability of Bitcoin mining operations worldwide. Miners suddenly found themselves earning half the amount of Bitcoin for the same amount of computational work. As a result, many miners were forced to reassess their mining operations and financial strategies to adapt to the new economic reality. One consequence of the Bitcoin halving is that it may have incentivized miners to sell a larger portion of their Bitcoin rewards to cover operating expenses. With fewer Bitcoin being generated as block rewards, miners may have found it necessary to liquidate a larger portion of their holdings to fund their operations, including electricity costs, hardware maintenance, and personnel salaries. This increased selling pressure from miners could contribute to the downward trend in the miner reserve, as more Bitcoin are being sold on the market rather than being held in reserve. The impact of the Bitcoin halving extends beyond the immediate reduction in block rewards. The halving event also has long-term implications for the supply and demand dynamics of Bitcoin. By reducing the rate at which new Bitcoin are created, the halving event effectively increases Bitcoin's scarcity over time. This scarcity is a fundamental characteristic of Bitcoin's design and is a key factor driving its value proposition as a store of value and digital gold. However, the reduction in block rewards also poses challenges for miners, particularly those operating with older or less efficient mining equipment. As the block reward decreases, miners must either increase their operational efficiency or risk becoming unprofitable. This dynamic has led to consolidation within the mining industry, with larger and more efficient mining operations gaining a competitive advantage over smaller players. So, what are the implications of the drop in Bitcoin's miner reserve? Well, it's essential to remember that the miner reserve is just one factor that can influence the supply and demand dynamics of Bitcoin. While a decrease in the miner reserve may lead to increased selling pressure in the short term, it's important to consider the broader market trends and factors at play. Ultimately, The drop in Bitcoin's miner reserve underscores the dynamic and ever-changing nature of the cryptocurrency market. As miners adapt to changing market conditions and technology advancements, we can expect to see fluctuations in the miner reserve and other key metrics. However, it's crucial to approach these developments with a long-term perspective and consider the broader fundamentals of Bitcoin, including its scarcity, utility, and adoption potential. In conclusion, the recent drop in Bitcoin's miner reserve has sparked speculation and debate within the crypto community about its potential implications for the market. While the decrease in the miner reserve may lead to increased selling pressure in the short term, it's important to consider the broader market trends and factors driving this trend. As Bitcoin continues to evolve and mature, we can expect to see fluctuations in key metrics like the miner reserve, but ultimately, the fundamentals of Bitcoin remain strong. That's all for today's video. Thanks for watching, and we'll see you in the next video. Stay tuned and stay crypto savvy.